You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That music can mean only one thing. It is time once again for the option block, everyone's favorite bi-weekly source for all things options related, some wit, some wisdom, easy for me to say, maybe even a little bit of calming reassurance in these heady, so fraught, so perilous days for the markets and indeed for us here. Going forward, my name is Mark Longo from theoptionsinsider.com, as well as, of course, I'm the ever-exciting The Options Insider Radio Network, coming at you live here noon Central, 1 p.m. Eastern on the Thursday edition of the show. You guys know how to get it live. You guys know how to get it after the fact, I hope. And wherever you listen, make sure you hit us up. Those questions, those comments, those insights, those pearls of wisdom. We do love to hear from you guys. If you feel so inclined, so motivated, you want to leave a review to help others continue to discover the program, have at it. We always appreciate whatever you want to put out there into the wild for us. Let's see who's joining us from the wild. Probably appropriate for our first contributor here. He is the rockingest of lobsters himself, Mr. Andrew Giovinazzi from the wilds of Maine. Stopping by the land of Option Pit by way of Carmen Line Capital. Mr. Rock Lobster, welcome back to the program. How go things in the hinterlands? You're out there clam fishing and ice skating while the world burns, sir.
I know. I do feel a little, I have a slight ping of guilt for it all, and I hope the world becomes better, but then again, I chose to just leave the world and go to Iraq anyway. So I am okay, but I do feel for the world. So it's not good.
Glad to know you still have one drop of empathy left in your dead black soul.
I do it in my dead heart, in my what is it, the Grinch heart.
Well, I have always roundly mocked you for living in the hinterlands. These days, you're looking like a genius. So who am I to mock such things here? As we move on over to another guy who lives safe from all contagion under the weather shield. That is St. Charles, Illinois, where we are joined once again by Uncle Mike TOSAW from St. Charles Wealth Advisors. Uncle Mike, how go things in the ultimate worldly paradise that is St. Charles, sir?
The ultimate worldly paradise is love and life, as always. I mean, we feel for the world in that don't want the bad stuff to get passed around. Definitely think we need to prepare for bad things ahead of us. Hopefully they don't come, but never hurts to be prepared. That's kind of what we option traders do.
And you know what we do? We keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the trading block, the portion of the show where we break down what the heck is trading. And we got a bit of a rinse and repeat from our earlier show this week. I think a lot of people out there, maybe some of the Uncle Mike fans as well, the Perma Bulls, we're hoping that this might have been a blip on the radar, or one or maybe two and done, then we would see a bit of a reversal like we have in pretty much every other big move to the downside over the course of the past couple of years. Sell off for a day, maybe two, then calmer, cooler, saner heads prevail, and we rally, and most of those sell-offs are pretty much wiped out within a day or two. Not so much the case this week, listeners. It's pretty much been a race to the downside every day. We tried bucking the trend a few times there this week, where the markets would try to catch a bid, maybe turn away from the dark side, but it was always short-lived and pretty much ending down all the time. And we're seeing a repeat of that again today. Most of the major indices off firmly yet again, off well over 1%. S&P about 1.1%. The Dow at about 1.2%, and the tech-heavy NASDAQ off about 1.33%. To the downside, gold and crude also taking a bit of a break as well. If you like all that fun stuff, including just the wipeout that has been crude this week, stay tuned. We'll be doing TWIFO shortly after this program. My buddy Sean from FTSE Russell will be joining me in studio, hopefully delicious gourmet burgers in hand, so we can celebrate the end of the world, at least with a delicious burger. We'll talk the meltdown that is in equities. It's been a lot melting down in small caps, a lot more than you might expect given the macro nature of this, as well as what's going on in crude, rates sliding it up, a lot of things out there. But it's mostly dark side on the TWIFO program. I'm not sure if Sean's going to like that this week, but we'll find out in a little over an hour, or hit next on your podcast device of choice. You can dive right into that after listening to this program. So all that red on the screen, listeners, means, of course, we've got some green, got some serious green on the vol screen today. Coming into showtime, we did see VIX at about a 31 and a quarter or so. It actually hit a high of nearly 35 intraday. It has come off that a little bit now. It's down to about 29 and a half. That still puts it up about 6 handles from where it was on our last show. So just knocking it out of the park to the upside. Our old friend 50 Cent laughing all the way to the bank, at least on the option side of his portfolio. He's probably hedging something else, so maybe he's not fully smiling. But on the pure option side, looking pretty good. VVIX also up, super frothy, I think it's a technical term, at about a 114. That puts it up about 3 handles from our last show. And our old friend VXX has the temerity. How dare it go up? And it's up for size, listeners. It's up to 21 now. That puts it up 4 handles from our last show. We were just talking about breaking the 13 handle to the downside. How many contracts were lined up there on those Feb 13 puts? Spoiler alert, it was a bunch. And now that seems like a distant memory. 7, 8 handles in the rearview mirror from just a few sessions here of rally hold. So VXX can go up. We said it before. And when it does, it goes up pretty hard. And this is one of those cases for that. And it's just been, as you mentioned, it's just been a crazy topsy-turvy week. When it all, hopefully when the dust settles soon, we'll have to have our buddy the Flow Master on to kind of parse the different nuggets of flow he saw that really stood out to him. But he did put out one tweet earlier this week talking about, I think this was on the 25th. Yes, this was on the 25th. That was a new daily volume record for the options industry, the options market as a whole, 40.7 million contracts. He said that blew away the prior record set in 2011 and also exceeds the total contract volume for the entire year of 1977 by 3 million contracts. So we did more than the entire business did in an entire year in one day on the 25th this week. So crazy stuff afoot. A lot to get to. Let's start in the land of the Rock Lobster because we haven't had a chance for him to chime in. Mr. Rock Lobster, we had a rare moment of agreement on the show on Monday. We're both Uncle Mike and the Greasiest of Meatballs were both firmly in the cash camp. I can't recall. I don't think that's ever happened on the show before. So you haven't had a chance to pick your brand a little bit. A, how much cash are you in? And then B, what else is catching your eye and indeed the eyes of your crazies in the pitch chat on this super crazy, super volatile, super turbulent week, sir?
So how much cash am I in? So from IRA point of view, like 35%, I think. And just lucky timing on that part. So as far as equity option account, probably 90%. Mostly just because I've been taking stuff off because I'm generally a long ball person. And I had a lot less cash in the account. Well, actually, I have more cash in the account now, but a lesser percentage last week, and I've just been rolling out of basically long VIX, long SPY, strangles, and stuff like just getting the other side of the backspread, just taking it off as the market's falling apart. So that part has been good. So no complaints about that. I haven't added any new equity exposure yet. So what do you do? And I don't really know as far as, this virus thing is, it's bad, but I don't think people know, like, either if it's really bad or kind of bad or worse than the flu or not worse than the flu, or, did the president do enough? Did he not do enough? Like a lot of questions. And we did touch 3,000 or really close to it this morning. I think we just got within a whisker of it. So just at least as the stuff I watch right now, usually when you have that kind of crazy vol peak and then it pulls back and it's kind of bottomy, not quite sure, but it did feel like that a little bit. So I guess we just sit here and watch at this point. The only thing is, I think people are trying to figure out, like, how many more countries and how fast it spreads to other countries. And that's still driving things. It could slow things down. It could slow all kinds of stuff down. I think there's sort of a lot of unknowns. China has now been in it for about a month, I think. I mean, as far as it's been newsworthy for a month, and they have like a 20-day incubation period. So what I'm trying to do is, at least for our market, South Korea, we heard it like kind of the weekend, the South Korea thing blew up, right? So I figure, okay, 28 days from there, we'll see relative time frame for, we could still be turbulent in that time frame, because that's kind of when it started to spread to another country, and then we'll know from there. So to be honest, I expect, more volatility. Maybe is it 30 VIX? I don't know, but I think we could still see that at least for the next 21 days, because that's kind of where we are time-wise on it. So, and we just don't know how it's going to disrupt supply chains and all, and all that kind of stuff. I do believe, though, after all this, I don't think things are quite going to be the same for global supply chains. And like, there's going to be they're going to start thinking about, companies are going to start thinking, well, maybe it's kind of a wake-up call on how they do things. So I don't think things will quite be the same afterward. But then again, that's like I said, like, I'm looking at that March 20 expiration as the, we're either going to know a lot more by then and it's worse, or it's going to be somewhat, we figured out sort of how to manage. Anyway, that's where I'm on it. That's, but I have nibbled on some stuff today, just a little bit in the option account. So most of the oil stocks, they're trading at prices I cannot believe. Got to start somewhere.
Yeah, you should tune into TWIFO in a little bit. We're going to talk about all that, not so much on the stock side, but just the net crude oil movement side. Spoiler alert, it's been down, listeners, quite a bit of late. So, yeah, it can't catch a bid to save its life, and now this is kind of just chopping the legs out from underneath there as pretty much all the demand in Asia seems to go away overnight. Uncle Mike, sir, you talked about it on the last show, how you're Mr. Cash these days, which I think surprised some people. You are our resident permeable, after all. What is going on out there these days? First off, folks want to know, are you still in cash, or have you started to dip your toes in and nibble here? And then what else is catching your eye out there, sir?
Well, so in terms of where I'm at right now, there's three sections of styles of investments that I'll manage. Section 1, buy and hold stocks and or ETFs. Those I'm still in. I always have been, and I always will be until clients obviously start to take distributions and that type of thing. But that I'm always going to have some type of buy and hold investments going. The second part would be hedged equities, or whereas collars, risk reversals, things like that. And for my SPY risk reversal, 100% in cash. Went to that the other day. And my thought behind that is that I'm actually ahead on that at this stage overall. And it's one of those things to where I got out of the short put in the bull market last fall, and I've just been kind of riding on the long call. And this is a long-term play. But as this market's going down, the long call's out of the money again, or was, and well, still is. Now I'm out of the money call. But my rationale behind that is that, let's say that I'm wrong and we snap back to where we were. Volatility is going to go down at a very rapid level, I believe, or a very rapid pace, I should say. And so it's because of that I'll get in. I will probably get in at a higher price should we snap back. But because vol is going to come down so much, it's not going to bite that badly. So I like getting out of things if I'm wrong, it's not going to bite that badly. And of course, if the market continues to go lower, then, well, I'm in cash. In terms of the aggressive trading section, that's the third section of money with which I manage, that I'm fairly active in, I should say. I mean, there's other things that I do, of course, with bonds and the silver collar that never does anything and that type of thing. But primarily, these are the three main sections of what I spend my time focusing on. Of course, with the silver collar. One of these days that'll move, maybe, kind of, sort of, who knows. But in the aggressive trading section, I am 100% in cash right now. And the reason for that is that the best trading year of my life, and I've talked about this on the show before, was 2008. And that year I invented a rule, or I made a rule to where when the market is negative for the year, I'm out. I'm not going to try and buy dips. I'm not going to try and get in when the market's down 20%, because if the market's down 20%, who's to say it can't go down further? So when the market's not strong enough to even be positive on the year, I really don't want to be a part of it. Now, if I'm in a trade when it goes the opposite side, then I'll stay in it. I'll play it out a little bit, typically. But when we're in markets like this, when the S&P is going down 100 points and then it moves roughly 70 points out to the upside in the morning, and like it did today, and when we have markets like this, it doesn't work with what I do. And so if it doesn't work with what I do, then I don't want to do it. So I have to admit, I haven't been this cash heavy and this concerned since 2008, quite frankly. So that's kind of where I'm at this stage. Now, with that being said, if I was a stock picker or for certain covered calls trades, which is kind of another section of money with which I manage, I'm foaming at the mouth right now to sell puts because I can hold that type of covered call trading would be more along my buy and hold section. But I don't have any cash in that right now. So with that, I mean, I love the idea of getting into something right now, but I think it's just very important as a trader to stick to your rules. And when the market's negative, I can't do it. And I have to be cautious. I always say on the show, I'm long-term bullish, short-term cautious. And it's times like this that I've been cautious, and it's saved my bacon and kept me in the business for 15 years of doing this. So I think that's very important to look at. Now, in terms of what I'm seeing in the markets as a whole, what fascinates me when we have markets like this is the VIX. And within the VIX, or volatility in general. Now, this is something that I may consider doing that I did do back in early 2017. And when we have large movements during the day, sometimes Vega can almost match Delta. Here's what I mean by this. This is something that I may consider doing with an anemic small amount of the portfolio. And so let's say the markets are just going all over the place. You can buy an out-of-the-money call for a few pennies. Okay? Now, markets continue to go up, then markets go up. Let's say the S&P moves up 40 points in an hour, which is not a big deal in these markets. Well, by doing that, you can sell a call a little bit at a higher level for the same price that you bought the call at the level you bought. And you essentially create a free call spread. Now, let's say that the market were to go down right after you did this. When I did this a couple of years ago, when we had those rapid markets early in the year, volatility would go up at such a rapid rate that it would actually make the higher strike call increase, and I would leg into a bullish call spread when the market's going against me. and it would be at a zero cost basis. So I've actually seen that happen, and that's something that I might look to do, but that's going to be with anemic amounts of money. Back when I did this a couple years ago, I would start off with like a half a position in a call that's worth almost nothing and create the risk-free call spread. And then I'd continue to do that. And I worked up to a pretty large position that I never paid for. Now, unfortunately, it was far out of the money, so I never made any money on it. But it was one of those things to where had the market come back from where it had come down from, I would have made more money on that trade than I probably have before or since, just because of the large position I built up for free. But unfortunately, it was only worth a couple of pennies. So that's another thing with which to maybe take a look at, and not necessarily just that strategy, but just ways with which you can take advantage of VIX, or in my case, for the most part, stay away from it. So you can probably tell right now that I don't have any trades to look at, so I'm coming up with all sorts of stuff and going a little bit stir crazy here. That's where I'm at right now, Mark.
Just watching the screens and twiddling your thing. You know, you can always adjust the silver collar. Oh, wait, no, I'm sorry. I'm sorry about that, Uncle Mike. You know, no silver collar love out there for you. That's the trade that has kept on mostly not doing much. But we'll check in on it one of these days and see how things are cooking. Speaking of how things are cooking, let's see what the broad market is up to out there. We mentioned setting records earlier in the week. Let's see what kind of numbers are on the board today. A few days into the sell-off, maybe market a little bit more adjusted to this. We'll see. VIX putting up some numbers, though, today. As of a few minutes ago, about 820,000 contracts on the tape out there in VIX land. I think got someone asking about 50 Cent. Maybe we'll get to that in a little bit, see if we can parse what he's up to. ADV out there is a little bit shy of 600K, so it's ticking up out there, but clearly not where we are right now. SPY just blowing the doors off. SPY, 5.2 million contracts on the tape. As of a few minutes ago, the ADV nearly 4 million out there. The S closing in on 2 million contracts, the ADV about 1.6 million. The Q's hitting about 1.3 million, the ADV a little bit shy of a million out there, and IWM at about almost 700,000 contracts, the ADV about 415. Let's move on to the single names, the most active. Some weird names lighting it up. Some you might expect, others perhaps not so much out here in this pandemic-stoked market out here. Number 10, good old GE, back in the top 10 again. Cost you $1.85, by the way, to break into the top 10 these days, listeners. That gets you all the way to GE. Number 9, Ford. Ford lighting it up to the tune of 222,000 contracts. Number 8, Gilead, always in the headlines these days, and good for about 234,000 contracts out there. This one, of course, there's been rumors they may be on the vaccine hunt here for this coronavirus, and that's propelled them to some interesting highs. In fact, they hit about 78.30 or so a few days ago. Now they've come off the other side of that, and they're no longer feeling the rub. They're selling off with the rest of the market. They're off about $1 today, about 73.75, so about 5 points or so off that high they hit. Actually, that was earlier this morning, 78.36. So all the mighty have fallen just in the span of a few hours here. Number 7, Uber. Uber out there as well, 258,000 contracts. Folks dying to rent themselves some vehicles virtually here in the coming pandemic. Number 6, a newcomer to the top 10. This is Space, a.k.a. Virgin Galactic Holdings, Inc., Class A, ticker symbol Space, SPCE. Of course, they've been going back and forth on getting that program up and running. Now they're getting some options up and running to the tune of 342,000 contracts. If you're wondering, listeners, the stock is at $23.84, off nearly $5, or nearly 17%. So not a good day here for Space. Number 5, Bank of America, 367,000 contracts on the tape. Number 4, Microsoft. Microsoft's been oddly persistent with its paper when we're in this height of everyone's driven by these macro concerns. Microsoft steadily doing another 400,000 contracts out there, 404 to be precise. Number 3, AMD, another perennial top 10er, back in the top 10, in the top 3 right now with 490,000 contracts. You probably can guess now number 2 and number 1. The question is, what order are they in, listeners? If you said Tesla number 2, you are a winner. 554,000 contracts. That means the fruit company, once again taking the top spot, 948,000 contracts on the tape. That's VIX numbers as of a few minutes ago. So VIX and Apple neck and neck. Who will be the Titan? Who will emerge victorious today? We shall see. Speaking of things we're going to see, we'll save the earnings for a little bit later on in the show because there are still some earnings popping off. We got some new earnings move results reports for you here, courtesy of our friends over there at ORAS. I'm just going to scroll through really quickly, see if there's any tickers in here that may catch your eye. There's so many. Again, theoptionsinsider.com is the place to go, listeners, for these reports, the most recent ones from today, as well as a bunch more. Here we go. We got Crocs, our old friend Crocs. They were at 33.87 coming into their announcement. They were pricing in about 9.5% move, and they ended up delivering nearly 17% to the downside. So outperforming their straddle pretty substantially out there right now. So I guess go figure. In these days of pandemic concerns, people are not interested, not buying rubber footwear. So apparently that one not lighting it up. Let's see if there's any others in here that are worthy of note. There's a bunch here, but I'll let you parse them for yourself. There's too many. We can go on for hours. We have to keep rolling now into our fun, funky, weird segment of the show. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, let's do it. Let's get weird. Let's get wild. I have no idea what the Ive Sauron is going to throw at us today. Let's all find out together. Looks like we got a newcomer, at least for the first one here. Let's see. This is Anaplan, ticker symbol PLAN, P-L-A-N. This is an American cloud-based planning software company, headquartered where else? In San Fran, the only city in the U.S. that have declared a state of emergency so far for the coronavirus without a single case. So there you go. But Anaplan right now trading $46.78 off 11.31 or nearly 20%. So not a good day here for Anaplan. Let's see what they've been up to over the course of the past year. Not a ticker we get to check in on too frequently here. A year ago they were trading $39.12, so well shy of where they are right now. Certainly well shy of their high. That was not their low for the year, though. Their low came a few months later. It's like around the April-May time frame with about 33.5. And they started rallying. By June into July, they got up to about 59, almost 60. And then they kind of sold off again. In October, they were back to about 44. Then they started feeling their oats again. And by the time February rolled around, they were back in that 60, over 60 actually. They were hit 63.71 in not too long ago, just about a week or so ago. So they had an interesting topsy-turvy week. And then apparently earnings, coronavirus, maybe a combo of the two either way. Something conspiring to knock them off a cliff from about 63 and change all the way down to where they are right now. Actually just hit 47 even to the dark side here. So not a good day here for Anaplan. Looks like it's been a bad couple of days here for Anaplan. Let's see what our Eye of Sauron has found for us. This looks like it might be puts, given the big sell-off, but you never know. And no, it's not. It's kind of the polar opposite. It is the Jan 50 calls, Jan 2021, 50 calls here, going up for $7.60, 5,500 times. That's a few cents off the offer over there on our friends, the MIAX. Of course, this is opening. There are earnings. They were today, so it's going to be a few earnings cycles between now and January. But they had one today, and clearly the market not liking what they're seeing out there. I'm just looking here. They're short. This is a short sale restricted name. They've done about 4 times their normal volume. Just checking to see if there are any other calls that are going up maybe against this, if it's a bit of a roll. No, it doesn't seem to be that way. It seems like these calls are straight up leading the dance. So someone looks like Mr. Rock Lobster. This stock is getting, I think the technical term is beat up pretty badly. Someone coming in deciding to go all the way out to Jan of next year and looks like scoop up some pretty expensive, pretty beefy calls here to the tune of $7.60 for $3 out of money calls on a stock that's fallen pretty aggressively. So you think it's a catch the fallen knife scenario here? You think someone's got an axe to grind? This is an interesting choice. Could be a bit of, it's not quite stock substitution at this point because it's not even a 50 delta call, but still it could be along those veins. Is that what you're sniffing, Mr. Rock Lobster?
Yeah, I mean, well, another thing too is you buy a call that's just out of the money like that, and I don't know if this would qualify for the Mike TOSAW plan of buying cheap option premium. I think he would be more apt to buy right that because you can sell that
most
call.
Likely.
I mean, like I think that would be on his buy right plan. I'm not saying you can't make money on that trade buying those, but I would just say, holy guacamole, Batman. That's a pretty good chunk of change for that. I mean, you're paying 1 year highs for that volatility right now. 1 year, maybe 2 year highs for that vol. Even if the stock goes up like $5 or $6, that vol could drop, it could have 7 or 8 points in that call. You might not make any money on a $5 rally if the vol comes in. So, I think it makes it better buy right personally. Or a call spread where you'd sell that strike, maybe buy the 40-50 for $5, something like that. Then you make a decent return on your dollar. But I just that's a very pricey call to purchase. But that being said, I think they're up 50 cents on it already. So
who are we to judge?
I know until we really. Remember that you're buying a Jan option. So, a lot of things can happen between now and January. The vol market you see right now might not be the vol market we have in 2 months or 3 months from now, or even a month from now. So you have to be, I would just say careful. I think it makes a great buy right if you like this stock. I mean, that's $8 a juice right now on a $47 stock out to, January. What is that? That's I don't know if that's around a 20% return, but not bad considering you're covered on 20% of the value of the stock.
Yeah, it's about 16. It's about 16% where the stock is right now. Yeah, so that's pretty beefy.
It makes a pretty juicy buy right. I just think that would be more of a. I'm going to invoke Mr. TOSAW, even though this is not his trade, so I don't give him credit for it. But to me, this makes it like a more ideal buy right candidate. That way you can kind of, see what happens with the market in the meantime. But
yeah, this has all the hallmarks of a trade that when they do it, and then let's say things turn around and the stock does move in their favor, they're going to be writing into us saying, I had calls and the stock went up. Why did I lose $3? That's what this has all the hallmarks of that written all over it. They're just paying through the nose for vol. You're right. I don't see any scenario where I wouldn't rather write this call. 16% of the underlying, you could do a lot with that. Even if this thing keeps crapping out, you could always buy it back pretty quickly. You're right. Once that vol settles in a little bit, just that alone is going to cause the value of these calls to come in probably pretty markedly and probably to the dismay of whoever is buying. I could put this one in the to be watched, but we already have a lot in there. This is for a whole year, so and it probably won't end well. So I think we could probably just maybe intuit what's going to happen on that one and move on to another newcomer here. These are not the names you would expect for a day that's driven by pandemic fears, massive sell-offs. That's why I kind of like our Eye of Sauron. It can surprise us at times. You're thinking massive sell-off, coronavirus fears, markets in turmoil, all that fun stuff. And, to the name that's going to come off your brain, first, we gave you one of them, was Plan. The next one, of course, Hilton Grand Vacations. What are you going to do when the world's melting down? You're going to go on vacation. Ticker symbol HGV. This is, of course, the Hilton Vacation, probably their timeshare arm out there as well. Let's see. This is the name that's at about $29, actually up today, which is kind of interesting. So they're bucking the trend, up 6.25%. Right around 29. This is the name that a year ago was a little bit north of where it is right now. It was right around 32 1/3. And it kind of stayed at those levels for a while until end of April, beginning of May. Then it started selling off. Got all the way down to about 25 1/4 in late May. Then it kind of rebounded from there up to about 33 by the end of July. Then it fell off a cliff quite literally here on the chart here Went from about 33 down to about 26 in the span of like a session or two. So clearly some earnings probably not greeted well by the stock, but it was a short-lived sell-off because by the 15th of August, it started rallying again, and by August 30th or so, it was back up to 33, so a very strange blip there, and then it kind of hovered there for a while up to about 36.5. That was its high for the year, until where we find ourselves right now, where it sold off pretty hard yesterday, down to about 27.25, and now today, someone deciding perhaps it's been a little bit overdone. They're in rally ho mode today. So I don't know what this could be calls, it could be puts. I might lean on the side of calls. Let's see. Oh yeah, it is calls. It is a 5,000 lot, a little bit closer to home than our last print of the APE. 29 calls going up for $1.65. Another meaty call trade here. Let's see, 29, that's exactly at the money right now. We just ticked 29.01, so these are exactly at the money calls. The market at the time was 75 cents at $1.65. This guy wasn't playing around. He went over there to ARCA and said, give me 5,000 of those for $1.65. Worth noting they do have earnings today before the bell, so when this guy put this on, he already knew the earnings. And clearly he liked what he saw because he decided, I'm taking a bunch of those. So $1.65, Mr. Rock Lobster, for a 5,000 lot of pretty much at the money calls expiring in April. Pretty interesting swing for, I wouldn't say a swing for the fences. This is a decent swing for a double to triple. Would you concur, sir?
Yeah, not too bad. I have to say though, like get Grand Vacations. I don't know if this is the timeshare stock or what, but the fact that you're loading up on the vacation stock today when everything just looks, not so good.
Yeah, not my first go-to when I wake up on a day like today. I got to load up on some vacation timeshare names.
And it's not that this can't make money, maybe the valuation's super low. And I'm just looking at it, right? And like they have crushed this thing since the coronavirus came out. Like it was a $35 stock. Now it's actually up a little bit to 20. I mean, it's up today, but I mean, not. You could see there being an opportunistic buyer, but again, you got an April call. It's pretty juicy. They bought a lot of them, so I would think they want some carry through here pretty soon to still make money on them. It's a $2 stock and kind of what I would call a slower moving type company. I mean, a $2 option. So you need some giddy up in the underlying to make sure they can get those dollars out of it. But so far, I mean, it was a scoop. There's no doubt about it. They're making money right now, but you don't make it till you close it.
I'll leave it up to you. Should we come back to this one or just keep moving on, sir?
You know what? This is an interesting as a bellwether for, I think the virus. I mean, it's a timeshare stock. Right? Like, who wants to go to the damn timeshare?
What's the old adage? As go timeshares, so go the virus stocks. Isn't that the old saw of market wisdom,
yes,
sir?
Exactly. It's on the tip of my tongue, Mark, right now. I can't quite place it, but yes, I think that is it. So interesting, and I hope they make their money, obviously. But that's right. I mean, it was a $33 stock before all this stuff happened. So, I mean, somebody clearly has that number in mind when you're buying calls like that.
Yeah, so I guess Mr. Rock Lobster wants to come back, so we shall come back to see what is up here for good old HGV. Now you're saying to yourself, you got timeshares, you got Plan, the last name on your list, day like today, Portola Pharmaceuticals. I don't know, it could be. This is a name you could. I'm not as familiar with this name. This is an American clinical stage biotech company. Maybe they have something cooking that pertains to coronavirus. I do believe they have earnings popping off, so that's probably a big driver of it. Ticker symbol PTLA right now, listeners. They're trading $10.50 off nearly $2 or about 15.5%. So not a good day for PTLA. Not a good year for them. Excuse me, either. Here at 30.60 is where they started the year off. So exactly 20 handles north of where they are right now. And they flirted up to those levels, got up to about nearly 38 back in April of last year, and then they kind of slowly started selling off. By June, they were down to about 25, and they kind of hovered in that range for most of the year, they're about 24 when the year ended and January began, and they fell off a cliff, as these biotechs are wont to do. They jack up, they jack down. This one turned to the downside here. In January, went from about $24 straight to 14, so sold off nearly 10 handles in one session. So clearly, maybe some bad earnings or some other developments out there. Either way, not feeling the love, and it's kind of been languishing ever since. From that 14, it's now sold off to where we find ourselves today after today's earnings, down to $10.50. So I'm going to guess probably some puts, but you never know on a name like this. Yep, it was some puts to the tune of the June. Going a little bit farther out this time. June $10 puts for $1.50, almost 5,000 times, 4,947 times. These were going up on the, actually about, looks like a little closer to mid-market, but a little bit bid, I guess you can say bid adjacent. They were pretty wide, as you might expect on a name like this coming out of earnings. They were at $1.25 at 220, and these went up for $1.50. So looks like it could be maybe a little bit of a line in the sand, someone deciding this far and no farther for Portola Pharmaceuticals, and if it breaks through the 10 handle, they're happy to buy it at an 8.5, and that is well below the 52-week low. So again, I haven't looked beyond that, but at least in the near term, that's not a terrible level. And they have their next earnings coming up after today. Looks like in May. So there will be another earnings cycle in this put right. So Mr. Rock Lobster, interesting, kind of meaty, pretty decently far out put right. Are you feeling this is a line in the sand? This is your favorite trade, or is this more of a maybe someone getting a decent level off to hedge here?
Well, what the I think I'm not going to, we obviously we can't advertise results here, but line in the sand puts historically have done very well. At least the people that sell line in the sand puts that you guys highlight do well. They're pretty good at picking their spots. So I'm saying yes. It's probably the only pharmaceutical company at all down today, to be honest. So I think that this looks pretty interesting. It looks like a line in the sand put, and who knows if they're going to make their money or not. It looks like your garden variety biotech that needs to do something to make some money. Stock down from 25, so they probably missed whatever they were trying to do. So anyway, it does look like a pretty vanilla, line in the sand put trade. I'd have to say, and we can talk 50 cent for 1 second if you want.
We can actually. I think we have a listener question about that, so let's just get right to it. A little bit of the old mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, everybody, welcome to the mail block. Times like this, we get deluged with questions from all sorts of sources, but I always like to give some love to the live, and our buddy Mark Brantler listening live. He wanted to know, he said, 50 is looking pretty. Yeah, probably, at least on the options side. He says, has he cashed out yet? And that's an interesting question. That's one I was kind of pondering myself, Mr. Rock Lobster. I know we have vol views tomorrow, so I was planning on doing a deep dive into this ahead of the show tomorrow. But if you've had a chance to keep an eye on Mr. 50 this week, Mr. Rock Lobster, what do you have to say on him? Has he been taking some profits off the table, sir?
Well, I'll just say this with 50 Cent. There's a reason he trades 400,000 contracts at once and I do not, because he is awesome. So I'm guessing just from the paper flow today, he owns the March 18, 20. It's he or she. It could be Miss Cent. It could be Miss Fitty. Paper-wise, it looks like there's been a steady seller of the March 24s, 50,000 contracts on open interest of almost 400,000. So I'm guessing he still has 250. They have 250,000 more to go. In at 50, out at anywhere from $3 to $3.50 on 50,000. So they probably already paid for most of their. They probably own the position now for nothing, and they're looking for maybe a little bit more. So if this sell-off keeps, because it looks like we're starting to turn down again, if it, comes back, they, that's where we are. And the calls, VIX-wise, future-wise, Future-wise, they're now just in the money, and VIX cash-wise, they're now $6, $8 in the money. So they got a ways to go.
50 cents to $3. Yeah, I'd do that. Again, he has other things against that probably aren't looking as good right now, but still, all we see are the option side. And from that perspective, yeah, 50 cents to $3, we used to say on the floor, that's a good do. I think you would do that a few times if you could. So everyone out there who has that question, is Mr. 50 taken? Well, I've still got more to go, but he has taken a few. He's not just going to sit there forever. Everyone was saying, when is he going to close these out? When's he going to close these out? Clearly, he was looking for a bigger move, and now with VIX cash hovering around 30, he got the move that he wanted. All right. I love our listeners. Jorge wants to know, are we all dead? No, we're not all dead, Jorge. You can take a deep breath. You can relax. I guess it depends what news outlets you listen to. Some are more dire, more stark than others. You want to stay away from like a zero hedge at a time like this because they're gonna walk you off the deep end. But no, I hate to break it to you, Jorge, but you are not dead. We are not all dead yet. We have some time to go. And if the worst comes to pass, we can all go up to the GIOVINAZZI compound. He has graciously extended an invitation to all Option Block listeners. Just show him your authentic Options Insider logo T-shirt at the gate, and he will let you in. Maz wants to know. We kind of touched on this at the top of the show, but Maz wants to know: is the whole ASP? I guess he means the All-Star Panel. Is the whole All-Star Panel still in cash? And what would be some good options plays to start getting back into the game here? Well, we just talked about this. Maybe Uncle Mike will start with you because you said you are in cash, and your rules prohibit you from getting back in. But as Maz and I'm sure others want to know, if you were going to get back in, it sounds like there were a few trades that were kind of catching your eye right now, Mr. Uncle Mike. Why don't you regale those for us again?
Yeah, I mean, something to do is if you're non-levered and you're okay owning a stock and being long-term in the stock, then I think that selling puts might not be a bad thing to do right now if you want to hold the stock for the long term. If you think you're going to get out of the stock within the next few months or so, then I don't think that's a good thing to do. The other thing with which you can do is that you can try and look for various skews in certain spreads. I had mentioned something that I did about a year and a half ago, about 2 years ago, and in ways with which if the volatility is at such a high level that sometimes you can find some skew out there to where you can get into a spread at a relatively inexpensive price in terms of verticals from my experience. But overall, though, if you're a bull, I would remain very cautious, and being in cash is not the worst place to be.
Cash, you said it before, cash is a position. So what's the old Rush lyric? If you choose not to decide, you still have made a choice. If you choose cash, that is a position. Mr. Rock Lobster, you mentioned some line in the sand puts maybe are a little bit attractive to you right now. I'd imagine more put spreads than puts right now. But if you have to start nibbling at those waters, start dipping your toes back into the waters, how would you proceed, sir?
I am looking at like 1x2 put spreads because the vol's so high, you get credit. So oil stocks like Exxon, XOP, blue chips like Walger, like all that stuff. That's what I have on my screen right now. And 1x2 put spreads for credits. You get another, 6 to 8, 9% down in the underlying before you're even at your short strike. And you still have a chance to make, actually a really nice trade. So I'm just looking at like kind of blue chippy names, like more like TOSAW said, something that you got to be comfortable having to roll that put out. But I don't think we're going to get that V-shaped bounce. We could, but just taking the fact vol's pretty high, you can get decent credits for pretty far out of the money stuff. Even I would even say almost broken wing butterflies, but you're looking down like another 100 points in SPY almost, and you get credit. So, I mean, look at stuff like that and think, right now, a 30-day straddle on the SPX is probably $200. So you have to think in your head, it's not unrealistic for SPX to move another $200 within a month. That's what the market's pricing. So just be mindful of the range of move that you're looking at either on the upside or the downside for the market currently. So, the easiest way is look at the straddle. Look at the straddle for the term you're interested in. A straddle is a call and a put. See where that is and place your stuff if you want to sell premium or write puts. Place it well outside the straddle now because you're going to be paid to do that. You're at a 2-year high, 2-year high in vol since December 24th, 2018. So, use the market to your advantage when the vol's this high. Look for stocks that you might want to own. And then kind of go forward and have a plan that you can deal with. So I think that's where we are. And that's as soon as this show's over, that's what I'm doing.
He's diving into ratio 1x2 put spreads. Again, it pays to be a little more savvy listeners than just straight up blasting out on puts, because you said before that way it could lie towards madness. 1x2, buy one, sell two. You still net short units at the end of the day, but you got more cushion there. You can identify some wiggle room on where you want to get in. And again, these puts are getting bid up, make some of that downside skew kind of attractive. Let's wrap it up here with Jim Roth. Jim Roth wants to know, is this all, in caps, all Corona, or is there some Sanders effect going on as well? It's an interesting question. I was kind of wondering that myself as I'm looking at all, obviously, I don't know how you can break down pure percentages, but I would have to say the lion's share of this is definitely driven by the macro concerns over the coronavirus and how much impact that's going to have, not just on global health, but also global economies, global production, everything else. Names like Apple not going to be able to produce their iPhones anymore, shipping, airlines, all these names taking a hit as a result of effectively a global lockdown that is looming on the horizon, not to mention the health ramifications that could come along with something like this if it does indeed spread, as some of these dire predictions are warning. But of course, domestically here, there has been a surge for Bernie Sanders. I think historically, it's fair to say he has not been Wall Street's favorite candidate. So the combo of the 1-2 surge of the coronavirus and the surge in the popularity and the victories of Bernie Sanders, I can't imagine that has had a mitigating effect on the sell-off. So I think the combo of one or two together has probably exacerbated each other. I don't know, Uncle Mike or Mr. Rocklops, any thoughts on this? How much you think, is it all Corona? Is it like 90% Corona, 10% Sanders? Is it 80-20? Is it more, or is there something else lurking out there that we're not even pricing into this scenario? I don't know, Uncle Mike, you have any thoughts?
A couple of thoughts. Interesting how the president got on saying he doesn't think it's Corona. He thinks it's more the Democrats making fools of themselves, they say, because how dare they politicize such a thing? But then he goes and politicizes it. But anyway, I thought that was kind of interesting. But no, I think there's no doubt Bernie Sanders is not a friend to the markets with his policies that he would have. So I think that could be a part of it. But overall, the other thing that I think you need to add to that, if you are a non-Bernie person, is that if he does get elected, if we have Republican House, Republican Congress, his policies are going to be so radical, a lot of them aren't going to get passed. So that's the other thing with which to think about is with the Republicans control Congress and the House and the Senate. And if they do, then we could get gridlock. And then with gridlock, Wall Street may like gridlock because it's somewhat predictable that nothing will happen. We could rally for Bernie. That's the other thought about if Bernie gets elected. So at this point, no, I think it's just this is mostly the beer virus.
Mr. Rocklobster, any thoughts? I know you're a diehard cynical libertarian at the end of the day. What are you think there's anything Sanders related, or is it 99.9% beer virus, as Uncle Mike likes to say?
I think it's just mostly beer virus, and in an extremely bought market. You have to be realistic. A market needed to sell off. This is a great excuse. Supply chain and slowdown in economies, it's still a huge unknown. Market has a hard time pricing unknowns, and that's why we're doing what we're doing. I will give Bernie a 10% factor in the market. So, but again, those are two negatives, I would say, not two positives. So one's a big negative, one's kind of a maybe negative. So, but still, and also, you know what the Fed's saying? We're not going to cut rates yet. So, the market has had that kind of smack of rate cuts all the time. kind of when they needed it, December 2018. I still was not happy with that rate cut, to be honest. Just let everybody suck it up. I thought that would be better, especially for, the budget and trying to get them to spend less money, and they didn't. So I think this is a healthy sell-off one way or another. It probably was necessary. But anyway, that's it. I'll stay with the TOSAW, though. I'm going to say 80%, coronavirus and 20% the other two.
Yeah, I think it's definitely fair. One is exacerbating the other, but one is certainly leading the dance. Now we have to lead our dance into our final segment. It's time to go around the block.
Around the block.
Lest you think it is all bear virus all the time, listeners, there are still some earnings popping off. If you want to just focus on the micro, get your head out of the very scary macro these days. We had some names popping off. We broke down a few of them already. Best Buy before the bell, TD Ameritrade before the bell. What's going on with that merger / acquisition? Some rumblings of regulatory concerns there. I guess we shall find out. After the bell today, we got Beyond Meat, big mover out there as well. Autodesk, VMware, AMC, a bunch of them, and more popping off. Foot Locker before the bell tomorrow out there as well. So there still are some earnings for you guys to sink your teeth into. And of course, if you want to learn more, head on over to everyone's favorite options-oriented destination, theoptionsinsider.com. All right, there she is. There's our music. Unfortunately, listeners, that music means we have come to the end. So we're going to do a combo of Around the Block, as well as what the heck they have cooking that may interest you. And if you're saying, I need more in my air holes, stay tuned. We'll be back in exactly half an hour once Sean and I get done eating our delicious gourmet burgers to talk all things that are lighting up the commodity space. Spoiler alert, equity is a big part of that, and mostly to the downside. We'll get to that, crude, some other things as well. But before we go, let's go back around the horn. Let's check in. Mr. Rock Lobster, what are you watching for the rest of the week, A? And then B, if folks want to reach out to you, find out more about what you guys are doing, where should they go? What should they do?
I'm watching this crazy market. Holy gosh. Come to optionpit.com. We will be launching a new product very soon, showing you how to use volatility to help influence your trading decisions, help you with, buying and selling. Like, do I buy calls? Do I sell puts? Simple, straightforward. It'll be a 10-week course with trade ideas that come with it. Mark and I will be doing it. Look for that very soon. And hopefully you like it. But in a market like this, I'm just giving you one guess. Mostly you're looking at selling some puts way the heck out there right now. So anyway, go to optionpit.com or just send me a note to Andrew at optionpit.com. You can join my Vol newsletter club. We're having a good little month. And just come by, check it out, and kick the tires. What the heck?
This sounds like it's a good month to be in a vol trading club. If ever there was a month to be in a vol trading club, Mr. Rock Lobster, I think this would be it. Optionpit.com is the place to go. And last but not least, Mr. Uncle Mike, sir, what are you watching as we go around the horn here outside of all things beer virus? And then if folks want to reach out to you and figure out maybe without someone to hold their hands in these turbulent markets, where should they go? What should they do? Uh-oh, the weather shield is interfering with him once again, listeners. But I'll do it for him. There we go. Uncle Mike, do we have you, sir? There you go.
Have you. Can you hear me now?
Yeah, I can hear you now. Go for it.
All right, what I'm watching is not much right now, I guess, in theory, because I can't trade anything. So just watching the market. Curious to see if we can bounce off the 3,000 level for the S&P, of course, the beer virus. And if you do have a lot of stocks that are you can't really sell because you don't want to take capital gains on them, but you're concerned with this downturn, give me a call. Find me, stcharleswealth.com. I can tell you on how you can hedge them. Love to work with you.
There you go. Give the man a call or just visit his site. Click on the Fox. stcharleswealth.com is the place to go. And on behalf of Uncle Mike and the Rock Lobster and myself, I want to thank all of you out there for downloading, streaming, subscribing. If you're saying you want more, stay tuned. We'll be back in exactly half an hour to break down all the things going on in the world of equities and energy and a lot more over there on TWIFO. Otherwise, listen after the fact. Just hit next on your device of choice. And then we'll see you back here tomorrow. Volatility Views, 1 p.m. Central, 2 p.m. Eastern. Then back again on Monday, where it all starts over again for the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.